crypto heat map. I like starting with that one, especially on weeks like this. Um, it's looking good. It's looking green. Uh, Bitcoin at all time high. Um, Fifth largest asset, overtaking Amazon. How are we feeling?
Feeling good. I can't quite see sway on there. No, I can see it a little bit. Yeah, I can see sway on there a little bit, right? Minus just a couple percent. Okay, it's not bad. Um, yeah, I mean, like you can already see it on here, like BTC lapping everyone up like yeah, around 7-8% in the past 7 days. I think total crypto market cap excluding BTC and ETH is only up like it's like less than 3%, it's like 2.5% or something
Mm.
in the past week. So it's like yeah, definitely Bitcoin's leading the way. So hopefully it can trickle down soon to some of the alts, but we'll see.
I think we're forever stuck in the Bitcoin dominance super cycle. We were promised the entire crypto market cap super cycle, but I think the harsh reality is it's the Bitcoin dom all the
It's
way.
true. Yeah, no, that's definitely true. Like, I think it's like the two most bullish things right now is like Bitcoin and stables. So that should be like the two assets that most people on crypto Twitter own the least of. But those are like the ones. Yeah, yeah. Like stablecoins obviously have the best headlines, most like an institutional adoption right now, and then BTC, the price speaks for itself. So yeah,
We had the mega hyper liquid guy who I think his at the peak it was like
yeah,
a
James Lynn.
billion-dollar position long on Bitcoin in total. So you know, it's crazy because like the fact someone even leveraged up that much and he didn't just get insta liquidated either. Because I remember a few months ago there was a guy called like To the Moon or something, and he had a huge Bitcoin leverage position as well. And eventually the market like retraced and liquidated him or partially liquidated him. And that's why it's like quite crazy now how everyone always just expected to see this huge leverage position. Yeah, as if anyone would make money, as if he could make profit. The market gods won't let this guy exit this position in profit. And like, I'm pretty sure he closed it out in like pretty decent profit. So, easy mode returning. Is it a scramble from
Like,
nation
the
states?
last guy or the James Wynn guy?
The one before James
One
Wynn.
before, yeah, right. They had one before because I think the new guy is like he's down bad now, or he's not down bad, but he's not. Yeah, after it bounced off the all-time highs, his P&O turned negative actually. So okay, yeah, that last guy, I think it was like an exploiter, right? The last hyperliquid whale. Okay,
Mhm.
right. I remember.
Hmm. All right, guys, let's kick off the show proper. Welcome to everyone listening in to a new market cap episode. On Market Cap, we discuss market movements, current events, and trending narratives together with our guests and explore the underlying themes a bit further. So, I'm your host and moderator. I'm Stefano, Director of Institutional Service at Alea Research. And with me, I have Daniel, our research lead, and D, our analyst and panel contributor. And we're joined by Richard Chen, GP at Varrock VC. Richard, how are you doing?
Good. Thanks for having me on.
Definitely. It's a pleasure. Um, we've known each other for a while now. You were at One Confirmation before, but not too long ago, you started for Rock VC, your own fund. Tell us a little bit more about how it started out, how you're doing things, your mandate, your fund thesis, all that good stuff.
Yeah. So Varrock, it's a pre-seed seed crypto fund. I write 600 to 900K checks on early stage crypto projects. I'm only investing in about 24 projects out of this fund, so that's over 4 years. So it's about six a year. So like that's much slower pace than other funds, and like that allows me to have a high bar for quality and also to spend a lot of time with founders post investment, so I can be super helpful and like the most value add investor on their cap table. In terms of like fund thesis mandate, it's like pretty generalist. Kind of one of the big lessons I've learned over the years is, ideas matter less than you think, and founder quality matters more than you think at the early stage, because product ideas pivot so much. If you have too cute, nuanced thesis on a product, kind of like one of my big mistakes I've learned is falling in love with a product, but like kind of ignoring red flags about a founder. And then as soon as the product pivots, then you're kind of stuck with a tier two founder. So like that's why I really want to back the best founders and kind of let them run with like what they think are like the category defining products in the next 5-10 years. Um, Also, like the name Varrock, that comes from RuneScape. I figured a lot of people in crypto have played RuneScape, so it's like a very if you know name. For
Yeah.
those who haven't, Varrock it's the largest city in RuneScape. It's where the Grand Exchange is located, and I often
Oh,
consider the Grand Exchange to be the OG DEX. That's where people like myself first learned about arbitrage, market making, like kind of all these important financial lessons that like transfer like one to one perfectly to crypto.
Yeah, for sure. We got some RuneScape players on board here as well.
just D,
Yeah,
not me.
it was definitely pivotal for me in learning about trading, economics in general. I mean, I probably did worse at school because I played RuneScape so much, and I was pretty bad at RuneScape anyway. So but it's definitely like there are multiple facets involved in the game that definitely have transferable skills that have come over into crypto. Like when you play that game, you know, you learn very quickly how to avoid being scammed. You learn very quickly about the fluctuations in prices of assets in a video game. You learn very quickly how to grind your character where you start with nothing, you grind that up into a point where your character has all this gear, money, many different ways to make money within the game. And I feel like into crypto, there's so many parallels. You can start off an account where, you might not have the biggest capital base to begin with. But there's many instances of guys in crypto who started airdrop farming, built up a large capital base, rolled that into subsequent positions, and now they've gone from like a very low starting amount to like there's probably guys out there who went from a couple $100 in their wallet and now command portfolios over 6-7 figures through just airdrop farming, the grind mindset. And I think that's the beauty that RuneScape really gave to a lot of guys like me and Richard who are in crypto now.
Yeah, for sure. I can relate a little bit. World of Warcraft player for a little while, and then that in world economy as well, and people grinding that, and yeah, just becoming full time traders. And then poker, I think, also is a big pipeline into crypto for sure. So yeah, multiple ways to make it in the industry. Um, yeah, Richard, what was interesting to me, what you were saying is how everything is already sort of like mapped out and planned out for your like your yearly plans and how many tickets you'll write. I wasn't necessarily aware that all that is like mapped out in advance.
Well, I mean, this it's like the rough cadence that I want to make investments. Obviously, if there's a ton of good founders fundraising, then yes, I would deploy faster than schedule. And also, like, kind of what I've learned is these things come in waves. So like there'll be times where you do nothing for 6 months and you just kind of have the patience and discipline to sit out, and all of a sudden you have like 3 investments all in like 2 weeks. Um,
Yeah.
but like roughly, I want to have this deployment period over 4 years.
Okay, that makes sense. And yeah, maybe we can touch on that a little bit further because it does seem like you're alluding to, right? There are like these shifts in the market where things heat up and things go faster and then they slow down. Right now, it seems like there's a bit of a surge going on in crypto VC funding. So last week, 6 industry projects raised just about 35 million, and then total amount invested in crypto projects is about 7.4 billion this year, and that's like a 85 jump over 2024. Um, so and the weird thing is that didn't really track with what my reading of the sentiment was for like Q1 this year, but apparently there's been a lot of allocations. What are you making of all this?
Yeah, I mean, it's hard to track VC funding based on press releases because press releases are usually on average like 6 months delayed. So Q1, I don't know when these rounds closed. It could be Q1, it could be Q4 last year.
Yeah.
Um, I will say that like VC funding is down significantly still from 21 and 22.
Okay.
It's just there's just lot less capital now in the industry. Kind of it trickles down from the LPs. Like a lot of LPs don't have dry powder. They're waiting for distributions from funds they've committed to from those vintages. And then now VC funds are a lot of them are like down to the last handful of checks before they have to go out and fundraise again. So like VCs are being like ultra selective in like how they hand out the last few checks. Um, so I think that's like kind of the state of VC funding right now. And
That
like
makes
anecdotally, rounds are taking longer to get done.
okay, that makes a lot of sense. For my insight, like these LPs you mentioned, are they typically like I don't know, TradFi type institutions, or are they like wealthy individuals? What does that look like?
It's a mix. Generally, the bigger fund you are, the more you need to have institutional LPs. And institutional LPs are typically like fund of funds, endowments, pension funds, foundations. Um, so like for my fund, for example, my fund is about 85% institutional. For smaller funds, like say you're sub 20, you can raise a lot of it from like wealthy individuals. So, like, scrap together a bunch of
Mhm.
100 to 50K checks, and then you have a fund. Um, I'd say from individual LPs care more about liquidity, and they tend to be more fickle with like crypto prices. Um, those who institutional LPs like they're used to investing over 10-year horizons, so they get less spooked when Bitcoin prices down 50%. Um, that said, uh, from the institutional side, a lot of LPs over deployed in 21 and 22.
Right.
So there is also a big liquidity crunch for them that they need to wait for distributions from funds they invested from those vintages before they can recycle the profits and like make more new VC investments. Um,
Right.
and also like another idiosyncratic things happening with just new administration is Trump's been cutting federal funding for universities, so now endowments are under big pressure to fund like daily operations for the universities. So like um, this wasn't really picked up in like the crypto media, but among institutional allocators, Yale actually had to sell 6 billion of their PEVC book on secondary, and like that was the first time they had to do it in history because they had a
Wow.
big liquidity crunch. And
Yeah,
Harvard is rumored to sell another 1-2 billion. So
I got that.
kind of everything trickles down from institutions at the end of the day, and like institution money goes to VCs, and the VCs goes to companies and founders. It just kind of takes a few months or a quarter's delay for these like macro impacts to like manifest themselves in like company fundraisers.
Wow, that's fascinating. Very interesting to see like that interconnectedness and like that the landscape to that whole industry. Um, and it's funny, it's kind of counter to what I expected it would be. Like when you mentioned that individual LPs can be more fickle, I would think that individual LPs would be maybe more degen, and like to gamble with their net worth a
Yeah,
little bit.
I guess depends who your LP base is. If your LP base is very crypto native, and like say they're doing your capital commitments with like Bitcoin or ETH, then it may make sense they would be like less fickle. But
Sure.
a lot of individual LPs, are kind of the first to panic when things go south.
Right.
Yeah, yeah.
Yeah, it's like that meme of like the guy buying the like inexpensive product is always like the one to complain the most, and then
Yeah.
like the Chad showing up, buying a ton, like just doesn't care.
Yeah.
No, but I think that was great, providing like some color, especially like on podcasts and on Twitter and stuff. Yeah, people definitely are just going to see like the bottom of the funnel, right? Where when the money flows from the VCs to the companies, and yeah, as you mentioned, like it's delayed by several months, um, or even like how the projects deploy that capital for incentives or whatever it might be. So yeah, I think it's definitely good to think about these like macro factors. Yeah, as you mentioned, endowments. That's probably that's one that a lot of people might not be thinking about. Do you think there's like overhang in the market from some of these funds that maybe raised in 21? And yeah, like I think the performance of some of these funds might not be public. So yeah, do you think there's any like overhang for tokens or of projects that raised in that time where like their investors have to start thinking about returning and like dumping some tokens, or do you think that's a concern worth thinking about at all?
Well, like a lot of funds that raised in 21 and like deployed the entire like aped the entire fund like that year, like they're probably still underwater. So kind of investors just at this point are just like hoping to get their money back.
Right.
So it'll take some time, like before projects launch, launch tokens, and then like there's like some liquidity. Um, I'd say another thing I forgot to mention is Bitcoin ETF is actually becoming a competitor to institutional money, VC money in
Mm.
crypto, because now like if you're a pension fund, it's like I can either put money in IBIT or
Yep.
allocate to crypto funds, and like if Bitcoin's outperforming this much, I'm like fully liquid. Like why not just allocate to the Bitcoin ETF? This is also why you've seen a divergence in like Bitcoin dominance, is because now like all the institutional money is going to Bitcoin, and like there's like very little interest, or if any, like to trickle down to the alts like ETH and other
Right.
assets. I think this is like different than previous cycles. Like in 21 and 22, people thought of alts as like leverage beta on Bitcoin. It's like Bitcoin's up 10%, you go long on Solana to get 20%. Now it's like very different, where just Bitcoin just keeps running away from the rest of the market.
Yeah.
And that's not good for venture either, because now for new project launches is like the best case outcome is probably going to be like low to mid billions, and like compare that to like AI companies that are like Cursor is raised at 9 billion, um, Figure is like rumored to be at 40 billion. So just the comps for crypto compared to like other industries in terms of like how much upside you can get is much less. So yeah, just crypto VCs and like companies are getting squeezed like macro wise from like a lot of different factors, and that's why like money going to crypto VC is still kind of down significantly from 21 and 22.
And Richard, what's some of your own decision making processes you use when you're writing these checks to some of these companies? Because obviously, I'm sure you can understand that there's a lot of projects which are simply sort of rehashings of previous ones. And in the previous cycle, every other new project was just another pool 2 variant, farm
Yep.
token variant. We had the rise of the delta neutral variants in this cycle. So how do you really ascertain between what's just a copycat and what is something that is bringing a bit of innovation?
Yeah. There's a phrase I like to use: company that defines a new category, and those are the companies I want to invest in. So like when you think of like NFTs, you think of OpenSea. When you think of prediction markets, you think of Polymarket. When you think of like delta neutral stablecoins, you think of Athena. Um, if like the category's already been defined, like there's like a term for it, it's probably too late. And like there's going to be like 20 other copycats that are trying to copy like what Athena is doing, but maybe have a slightly different delta neutral strategy. Maybe you're not going for like blue chips, you're going for like private staffs, like which is what neutral is doing. um, and like I feel like the upside then is capped if you're doing like X for Y, and but then like Y is a strictly a subset of the market size of X. So like the best investments are the ones that are like very new, weird, controversial, that don't really have a good like market comp because it's like defining a new category. So like in terms of like thesis, like those are like kind of the companies I like to look for, and obviously founder qualities matter because like when ideas become really obvious, then it becomes super competitive and crowded, and like if it's not a good founder, like you might have a first mover's advantage, but then you quickly get out competed and out hustled by other teams that come in later and like execute better. Those are like probably the two things I look for the most when evaluating new investments.
And sorry, I've got one other question. And what, if any, are these new areas that don't have a definitive name, like delta neutral, like a rehashing of a Uniswap? What areas currently are exciting you the most in the space?
Yeah. Well, this area was like relatively new 6 months ago. Now it's becoming more obvious. It's the intersection of crypto and robotics, like deep in robotics. So like one of the first investments I made for the fund is a company called Red Rabbit Robotics, which is right now they're building a teleop robot that's deployed in warehouses, supply chain like logistics companies, factories, and to transition from teleop to fully autonomous, they need to collect a lot of training data for the VLA models. And like crypto incentives are a great way of doing that. Like bootstrapping, crowdsourcing a lot of training data to feed the models with like the deepen incentives. That wasn't a super obvious category 6 months ago. Now, there's a lot of new robotics companies. So there's, Reborn, there's Frodobots, there's many others. It's like that was one. Like you kind of have to front run the next big narrative.
That's a good one. That is interesting. And I guess it also makes sense then why you step in at the pre-seed and seed stage, right? Because you're really at kind of like the bleeding edge of like it, like the category is
Mm-hmm.
not even defined yet. By the time you get to like series A, B, etc., it's already like it is getting to that stage where it is becoming a defined category with a narrative and a name on it, right?
Yeah, definitely.
I see. Okay,
That's
that
great.
makes
Yeah, that's interesting. I think yeah, yeah, incentives, being able to like crowdsource things, yeah, for like robotics and other stuff. Using blockchain for data as a data layer. Yeah, these are like common themes, and then it's about like yeah, trying to find a way to apply it for like robotics are obviously already be like a big it's like one of the hottest sectors even outside of crypto. So yeah, when exploring like how robotics, AI, like how crypto and these sectors can converge, I think that's really some of the common themes is yeah, crowdsourcing and yeah, gathering data, all that
Mm-hmm.
stuff. I mean, we can get into this in the next section, but yeah, I think WorldCoin is kind of like, I think
mm,
that's another good example of that. So yeah, they had their $135 million token sale, or it was announced this week. So I think that's an interesting one of like some of the more traditional investors had A16Z and Bain Capital finally getting, or not finally, like they've been involved in crypto, but yeah, it seems like I think the markets were like a little starved for something like this, like top names from Silicon Valley, um, getting involved with something in crypto that's not like Bitcoin or stable coins. So I think this is really interesting. Kind of like yeah, crypto X AI, right? Like the intersection of two hot sectors. Obviously, OpenAI connected with WorldCoin, or now it's called World. But I mean, it's like every week they're bringing something new out, right? So they have their thing with Joni Ive that just came out yesterday, and then yeah, now we have this. So, Richard, like, is this an area you're looking at? Do you think we'll see more headlines like this? Is it something that you like personally would be interested in, or yeah, just
Yeah, I've
what are your
talked to a
thoughts on
few
this?
WorldCoin like consumer app projects. I haven't made any investments yet. Um, I think for like a big headline like this, 135 million raise, it's like a large part due to the fact that like big funds like A16Z crypto, you have 4 billion to deploy. there aren't that many companies, projects that can absorb that amount of money or
Right.
at the stage to do so. So when like WorldCoin comes around, you have to put in like $100 million check into the project because like that's the only way you're going to deploy the fund, other than like putting in Bitcoin and ETH. Yeah, and like I'd say it was interesting last year. Like WorldCoin, the price was trading very much like an OpenAI meme coin, which there
Right.
was a big run up in like March, like coinciding with the fact that OpenAI was like hitting an inflection point. Um, but price wise, one thing to keep in mind that I think WorldCoin is still like 14% unlocked, so there's still a lot of unlocks and like vesting like yet to come. So like we might see prices go down because of unlocks, but it's still TBD.
Right. Yeah. Its market its market cap has gone up, but it's yeah definitely its price not as much. Very a lot of emissions with the world. Okay. So do you think there's any other like factors that can get so for this one? I think it's obviously like, it's linked with right like Sam Altman's a co-founder. So like for other areas of crypto, like whether it's crypto, robotics, DePIN, stuff like this, like what do you think needs to happen to yeah push these like very large allocators to buy in crypto? Because like as you said, right, it seems like on the surface it seems like you know if Sam Altman didn't co-found this thing, like I probably wouldn't be getting this level of attention. So like what can these projects do to maybe like draw more attention from some of the larger not 100% crypto native capital allocators?
Yeah, I think like if you can like build a new product that's like bringing new users into crypto, like kind of bringing crypto more mainstream. Like that's why there's so much um, institutional allocator interest in stablecoins, because like stablecoins is like one of the few breakout apps of crypto that's like not just purely crypto native. Like since post bridge acquisition from Stripe, that kind of opened the Overton windows. Like now every VC like has to have their stablecoin play investment.
Mm.
So I actually think like stablecoins is starting to get like overheated now. Like I see like copycats. Like stablecoin neobank is probably the most crowded idea right now. Is like every emerging market country. So like think like Argentina, Brazil, Mexico, Pakistan, Middle East, North Africa. Like every region has like multiple stablecoin neobank competitors going after the same market,
Yeah.
and they've all like received a lot of VC funding. So it'll be interesting to see how that shakes out.
You
Um, you've
you
seen like stable coins. Sorry, go ahead.
no, I was just curious. I think you posted about that last week, and you were posing a question. Like, I think you were saying like the total addressable market on those are quite limited, right? And you were posing this question
Mhm.
of like, isn't the upside very capped there? And am I missing something? And I was wondering if anyone came back to you on that question with a good answer.
Yeah, I mean, it's a fair question. This is why I have like some healthy skepticism of this investing in this space or just emerging markets in general. Is like if you use GDP as a heuristic for TAM, like total addressable market, like
Uh-huh.
the GDPs of all these countries are tiny, like compared to the US.
Yeah.
Like like probably like 1-2% each of the GDP of the US. US is a 27 trillion, and like most of these countries are in the hundreds of billions. So like what happens then is like you can build a really, really good product in business, but then you quickly hit a ceiling on growth. So you grow to say $100 million valuation company, and you can't grow anymore because you like literally run out of people to like sell this product to in this country. So then you have to expand country to country. The problem is like the playbook for adoption is very different per country. Like each country's laws, regulations,
Yeah.
economies, user behavior, consumer behaviors are very different. It's very idiosyncratic. So like that's kind of where me as a VC, it's like I struggle with funding these companies because like VC, you're looking for multi-billion-dollar outcomes, and like to build a company that reaches 100 million, it's like really good for the founder, but it's not going to return a fund. It's a good small medium-sized business, but it's not like a company at the size of like Uber or OpenAI or something.
I hear you.
Um,
Might it
that's kind of been
be?
my main challenge of investing in emerging markets.
Yeah, that makes sense. Might it be a viable strategy for maybe angel investors whose ticket size is like smaller, and they might still get like they might achieve a high multiple in those emerging markets, maybe even if the total value is not in the billions.
Yeah, I think a strategy that works is like if you can invest in these companies at a super cheap valuation, so sub 10.
Yeah.
Like there's like one, I've spoken to like a lot of local fiat to crypto stablecoin on and off ramps. Like there's one for Central America that was at like 6 million valuation. So, if 6 million turns into 100 million, that's a good return. But like your entry price really, really matters when investing in emerging markets. And like, I'm always skeptical when I see like these big rounds done at like, you know, typical crypto valuations. But the market you're going after is say like, I'm thinking like ZAR in Pakistan, for example, where,
Yeah.
they raised 7 million. The round valuation is probably like 35, 40, is my guess. And you're going after like a 600 billion GDP country. And like, and like the most valuable fintech company in Pakistan is 100 million. So I just wonder like how much upside there is
And it might
to
get
invest
blown
in
up
there.
as well now.
Yeah. And like, people always like point to Nubank as like the case study of like where
Right.
investing
Yeah.
in emerging
New
markets
bank.
work. Like Nubank is the Brazilian fintech bank that's now publicly traded worth 40 billion. But then if you look at GDP, Brazil is $2 trillion GDP. All of South America is 3 trillion. So actually, Brazil is 2/3 of the economy of South America.
Yeah, yeah, yeah.
And
Right.
like,
Right.
but there's still like with 2 trillion,
Yeah.
like
Sure.
yes, you can build a $40 billion business. But I like to do like a lot of this back of the envelope math just to see like kind of how much growth you need to get, what the assumptions are to build a big like multi-billion-dollar business.
Right. So you'd be more interested in like these large emerging market like Brazil, India, something like that. Not really these
Mhm.
more like um, smaller countries. Yeah, a little like a Pakistan. Okay, I
Yeah.
think that that makes sense. I think it's not like a common one, like a common objection to like the stablecoin thing. I mean, I think a lot of people they're like very bullish on stablecoins. It's like a very U.S. centric thing. Yeah, because it makes the most sense outside of the US. But yeah, you have like fragmented markets if these fintechs are looking to expand. And yeah, I think it's just an area where like not a lot of people like it's just not a sexy thing to talk about like on Twitter. You know what I mean? So you don't
Yeah.
have like a lot of people. Isn't like yes, some of these little fintechs. I shouldn't say little, but there's not like a lot of visibility on them. I mean, we've written about some of these and like posted stuff. It just doesn't get that much traction, even though it might be interesting. So yeah, I think that makes sense. There is like a lot of these fintechs using it for like cross border payments. Yeah, I can definitely like see where you're coming from with the bear stable coin take. Like it makes sense.
Plus, you could argue as well, like there's nothing stopping from people or investors in these countries from using alternatives. Like, if the yield that you can get wherever you live, because I know there's many examples, right, where a lot of these countries exchange on the black market level because the actual given rate in the local bank is so poor that
Mhm.
no one would ever take it, right? But then if you look at the nature of many of these projects in crypto, decentralized to an extent, peer-to-peer transacting, then you could argue, well, there's no need for there to be native. This is the stable for this country. This is it for this country. Because if people can use a computer, phone, or internet, there should be nothing stopping them from being able to take advantage of yields in other protocols, most likely from fintech companies or crypto companies based in the largest economies in the world. And I think that's the side of it that people might miss.
Yeah. People also forget Binance P2P is actually like the
Right.
largest, most widely used crypto product in emerging markets. And
Yeah.
it's like
Exactly.
it's
Yeah.
basically like a black market where like someone like lists advertises the rate for swapping the local currency to Tether. and like you can get much better exchange rates than like going to your local bank.
Right. Yeah, it's some of Binance's largest trading volumes, like for P2P specifically. It's like Vietnam, like China. It's like places where it's not even like technically completely allowed, but it still happens. So it makes up like a very large percent of their P2P volumes. So yeah, I definitely think sometimes like a new project or a new chain, right? Like there's a couple new like stablecoin like payment specific focused chains that came out recently, right? Codex and Plasma.
Yep.
But then yeah, sometimes like the solution isn't really like a chain. It's just like a better software, like a better exchange that can provide like it doesn't have to be a chain. It could just be an app that works
Yeah.
better
Well,
than the
VCs like
existing
investing in
apps.
chains just because like the
Yeah.
chains make money.
Right.
Yeah. Talking about different markets, we were looking at the Japanese market for because of MetaPlanet. Um, let me pull-
MetaPlanet, right?
yeah. Let me pull this
Yeah,
up.
I think that's an interesting one. Yeah, MetaPlanet's it's like a very interesting like I don't know like it started off as a hotel. It was like a hotel brand, like in an
Was it?
emerging market. Yeah, it used to be like a hotel brand, which I thought was interesting. Like MicroStrategy, at least it was like a software company or something, like a couple decades ago. But yeah, MetaPlanet started off as like a hotel chain, like in like emerging markets, and then yeah, they pivoted. I mean, they successfully pivoted, I guess, um, to this Bitcoin strategy. Um, yeah, it didn't. D, I think you can
Yeah.
piggyback.
Yeah, I wanted to draw some parallels between what we're seeing now because I think it's kind of like ironic in a sense because years and years and years in Japan when they had very very low interest rates, even negative interest rates, at a point it just simply wasn't even worth a lot of these banks to hold on to cash. So what you saw during a period was the idea of something called a zombie company, right? And what these were, it was just a small company who they weren't making enough money to pay off any of their bills, but the banks kept lending them money anyway. The loans in Japan were super cheap at the time. And so banks, because the banks were being charged to hold on to money, it meant that banks had to give money to anyone basically. So whilst these banks didn't want to admit their mistakes, ultimately you had tons and tons of these companies who were worthless really, but they were surviving from this cheap credit. Now you're probably thinking, well, what the hell does this have to do with MetaPlanet? What are you getting to? Are you just some madman? I mean, partially that is true, but what the point I'm making now is that you see something like MetaPlanet, where they've come out with this Bitcoin treasury, this big push, and the point I want to make is that could this be the start of like this move away where all these companies who survive from cheap debt for years and years and years. A company like MetaPlanet probably could have been one of these companies in the past that only stayed relevant because of this. But now they're even extra relevant because of their Bitcoin treasury. So I think it'd be interesting to see if we see many of these other companies who are zombie companies who stayed relevant from the cheap loans. Will they pivot towards a more Bitcoin treasury focus with the rising Japanese government yields, with these yields getting higher and higher and more stress being placed on these zombie companies? Is there a big pivot that we see where for all the hardcore Bitcoin maxis out there who truly believe that, it's the superior collateral for everything, you should mortgage your house, have Bitcoin as collateral, you should get your car Bitcoin as collateral? Is this sort of like one of these phases where maybe it could be a new paradigm, or maybe we're just all bulled up because Bitcoin hit an all-time high? I think that was the big point for me.
What should we be wary?
Yeah,
Is
I
it
mean,
something you,
it's interesting, right? Because, we're seeing more and more of these companies adopt this Bitcoin treasury focus now. And I've
yeah.
seen a lot of arguments on Twitter about, will the next bear market be brought about through companies who levered up into this bull run, saying we're a Bitcoin treasury company now, only for as it eventually slows down and rolls over? And then is there a possibility where these companies trade massively below what the amount of Bitcoin they hold to the valuation of the company? Where a point where, you know, you might have a $1 billion company that's holding that at its peak was trading at a premium, and then Bitcoin drops at say 50%, and their average buy price of Bitcoin was around 100K. Well, hang on a second. Are all these companies going to then have to like capitulate on their treasury? So I think it's an interesting point to look at either way.
Yeah, I mean, with the Bitcoin, I think there's only like a few people that can do it. So you already have, like, you have the other one. We talked about the other one in past episodes, 21 Capital, the new one that just came out. Like, their whole thing is collateralized lending. So like you can put your Bitcoin on their app or platform or whatever and like borrow against it. So it's not like the opportunity to be like a peer play where you're just accumulating BTC. Like, I think it's already kind of over. Like, you can't. There's only room for one guy to do that. Like MicroStrategy, you got to kind of have like these auxiliary offerings to get people in the door. So 21 Capital is doing that, and then I mean 21 Capital is even like they're backed by SoftBank, right? So I think SoftBank has like it's like a 9-figure investment in 21 Capital already. So it's like for Japan, that's already kind of like a conduit for the Japanese market, especially for like a country like Japan, where it's like it is the 5th largest economy in the world, right? But I definitely question like how many more of these can you have? Like, even in the U.S., how many more of these can you have? You have the ETFs, you have MicroStrategy, you got 21 Capital, you got their thing. I don't even think the SPAC officially like merged yet. I think for Bitcoin, I don't know. I think the opportunity window is like closing a bit. Maybe for another coin, there could be something there. I don't know. Can we have an ETH one, a Sol one? I don't know. We'll see.
We'll see. Daniel, now that we're touching on macro already, right? Um, what's been going on in the macro markets relevant
In the
to
macro markets. Yeah. So on screen, what you're looking at, this is actually from the weekend. This is our weekend newsletter for markets. But yeah, some things have obviously changed since then, namely Bitcoin, right? Reaching new all-time high. But yeah, I mean, things were already like looking up before that. You had fear and greed index moving up, but not getting overextended, right? So even with Bitcoin at all-time highs, fear and greed index still today, it's like at like a 73. Like, it still hasn't meaningfully increased since the weekend. So I guess that's like a positive sign. And yeah, I mean, I think it's good to see Bitcoin like re-inking that stronger correlation with a gold instead of stock, right? Like, stocks haven't been doing that well, but now gold is, right? So it's like Bitcoin is like switching between modes. You know what I mean? Like, it has its equities mode, where like it's rising with equities as it go up, and they're like, oh, like there's a problem. People are concerned about, like, the health of the U.S. or whatever. Now gold's doing good. Like, oh, it's switching back to gold. So I think it's been really interesting to see something that you had historically, like, you really didn't. Yeah, you didn't see that. But now you are. This is just like a new thing, just within the past couple of months. So on this newest all-time high push, I think it's really meaningful that you actually got that, right? Like, the last all-time high, it was not right, like, off the backs of gold. It was very much like it's kind of like a equities thing, right? January 20, more in line with like what crypto has historically been aligned with, like a beta to tech stocks. So yeah, now we're seeing this correlation more of like a store of value type thing during uncertainty. So I think that's good. It's good for Bitcoin. For alts, it's not. Yeah, as we talked about earlier, the total 3, right? Total crypto market cap, besides Bitcoin, is not really doing that good. But for Bitcoin specifically, it's like a good thing to see. I think it's definitely something to keep an eye on, like, just for global markets, and like how assets are viewed like internationally. Yeah.
Hmm. D, you touched on this dynamic as well last week, right? Where BTC is like coupling and decoupling from then gold, then stocks. I think last week you mostly touched on the link with gold, if I'm not
With the Nasdaq,
with
I was looking at
Nasdaq.
the rolling beta between Bitcoin and the Nasdaq, and we were looking at various different correlation tests to see, just how correlated Bitcoin actually is with Nasdaq. But this week, I've come with a complete different view. This week, I brought in a different analysis. We're looking at options data this week. We're looking at something called gamma exposure, right? I'm not going to be boring and do the same thing week in, week out. I wanted to flip it on its head, especially for the guys listening, just to give a different insight into, the different things that you really can do with these. So what I'm going to do, I'm going to quickly share my screen. If you give me 1 second, here's one I made
Yeah,
earlier for any of the people who enjoyed Blue Peter out there. Wait a second. Give me 1 second.
sure thing. So for Richard and for the people listening in, um, D has decided to get creative and apply some vibe coding and see what's possible. And he's
So
been
you
doing
can see it.
some analyses.
Right. Yep.
Excellent. So what this is, right? This is the Bitcoin gamma exposure. This tells us basically the chart's analyzing gamma exposure for Bitcoin prices. So what we can see is it shows the amount of gamma exposure at each strike price. And what we're looking at truly is these different levels, right? So we have this area which is called the zero gamma flip point, right? And we have another which is the max positive GEX at 110,000. So to start with the flip point of 104,000, this is a crucial level. It's a strike price where the net gamma exposure in the market flips from positive to negative. So at this level, positive gamma tends to dominate, potentially leading to suppressed volatility and price pinning. Okay, now why does this mean anything? Because as the market starts to really ramp up and move up, people can increasingly be drawn into certain narratives, top blasters galore, people who have labored up the house, go all in, we're going to break out to 150, 200K. However, what we need to understand, right, is because this chart shows such a larger area of positive gamma compared to negative, this suggests that the market overall is positioned in a way that could dampen volatility. So whilst we look at around the current price of Bitcoin, let's say it's still around 111K, it's well within this green area. So what this often can lead to is a pinning of price. Basically, market makers, in order to hedge their positions, will likely sell if the price rises above this level and buy if it falls below. So this acts as almost a strong magnet in terms or resistance or support. So whilst all of us hope and dream that at this 110,000 level, we're going to, pump up, we're going to flip everything, catch gold, $1 million a coin, there is a sense where, maybe just relax yourself a little bit. Market was positioned in terms of the options market for a lot of these moves. So near current prices, the volatility will be suppressed, meaning it's going to be stuck around this level for a while. However, one thing that's also worth mentioning is that if the price falls below 104,000, there's potential for that volatility to increase again. Basically, it won't be as suppressed as it is now. However, it will give maybe some of this whipsaw action. So to summarize in total, this chart shows the Bitcoin options market at the time of this snapshot is particularly characterized by the positive gamma. It suggests that price stability will be around with a pinning around the 110,000 strike price. But we should watch if it does retrace back below 104,000 because it could lead to a lot higher volatility.
Right. And how instrumental is like the options market for Bitcoin? Like I genuinely
So
don't
it's
know. I think it's
definitely,
growing, right? Like there's more availability of options like in U.S. markets,
yeah.
like on CME.
So the data was primarily looking at the derivative options market. I know you can trade options across all the different ETFs now. So it might, maybe it's different, if you use the data from those, but obviously I'm too poor to afford a Bloomberg terminal, so I'm not going to be able to look into that sort of insight. But I think it depends, right? The crypto market was dominated by the perpetual futures for so long that some in the traditional space favor the options market a lot more over the perp market. And it's still a bit of a disconnect that you see between
Right.
crypto and TradFi. I think that, they're much more focused on options, whereas crypto had the perp come out, which was instrumental in the early days. So it depends. If the options markets start to grow more, then maybe these sorts of things are much more significant. But I think at the moment it's still very small. I mean, on chain options, barely, no, hardly anyone trades them at all. So,
Yeah.
Mhm.
Right. Yeah. No, I think it's important to note, like as Bitcoin dominates, as Bitcoin as an asset, like yeah, continues to grow, like much further beyond like with the alts. Yeah, like the ways to monitor market health and all that stuff, it starts to look much more yeah like how you would gauge health in traditional markets. And yeah, some of these things in the past that might apply for like certain tokens and stuff definitely do not apply to Bitcoin anymore.
and actually,
Richard,
whilst we're on the topic of the Bitcoin's strength and dominance, another question for you, Richard: have you found there's been sort of a greater influx of more projects building around Bitcoin infrastructure as opposed to the previous examples where it was like a new L2, a new L1, a new swap program, a new perp dex? Have you seen that at all in your line?
So actually, surprisingly, no. Just because like Bitcoin L2s and like kind of that ecosystem building on Bitcoin, like investors see that more as like alts infrastructure, like a new L1, L2, new DEX, things like that. And like Bitcoin as like a store of value is just in a tier of its own.
Right.
Um, and like just the thing is like for Bitcoin as a store of value, like there's always going to be natural buying demand. There's going to be the micro strategies of the world, companies that buy Bitcoin. You probably saw in the news, both Texas and Arizona have bills to establish a strategic Bitcoin reserve. So like that's
yep.
also like a massive, buying pressure incoming for Bitcoin. And then for ETH, Solana, all these other altcoins, like there isn't such natural demand. And like I think that's why there's been a recent push to like KPIs, revenue, things like that. So like these projects and tokens can be like valued more like equities, where if you show that you have good cash flows, then that could maybe provide like a natural buying demand from like fundamentals focused funds and institutions. But otherwise, Bitcoin's just in a league of its own, and like the rest of the altcoin market is been pretty flat since 21, 22.
Right. Are you modeling out revenues at all for investments? Like venture might be a little early compared to like liquid token investing, looking at some of these DeFi tokens and stuff. But is that something you think about? Is like, okay, can this thing actually, like maybe it is the first of its genre, but can this thing actually, like turn a profit some years down the line? So is that
Yeah.
in your
Um,
considerations?
so like the stage I invest in pre-seed seed is like usually pre-product. So like you can't really do any financial
Right.
modeling. It's kind of a gut feel on like the market. One thing I think a lot about for revenue is like this is actually unique to crypto is like how lindy and sticky is the revenue. Because you've seen in the past there are a lot of social fi consumer projects that can print $40 million in revenue and like fizzle out in 3 months. Like Friend Tech is a good
Yeah.
example.
Yeah.
Um, and so like that's why just because you look at a revenue chart that's going up and to the right doesn't mean that it's going to stay that way forever. That it could like flip around and you end up with like a perfect bell curve graph in terms of the revenue. That's like one thing I think about a lot for like crypto projects, especially consumer projects. Is like how sticky is the revenue, or is it just like a short term fad?
Yeah, yeah, especially in crypto. Yeah, it can be such a but I mean even 1 month of like very solid revenues can
or
lasted
even
to
one
however
day.
many years. Yeah,
I
one
mean, I
day.
think if you know time.fun, I think that was like
Yeah,
one day, like 100 million in volume or something.
geez,
That was it.
how much did that? What was their take on that?
Uh, Probably
What's their
like
fees?
a percent or two is my guess.
Okay, okay. Yeah, so I think it's definitely important to like balance like between the like the narrative and then the more like monetization aspect, like the commercialization of it. But I think virtual is like a good one where it's like not hopping on like a trend, but kind of like pivoting towards obviously agents. That was like the perfect time
Hmm.
for something, right? Like Q4 last year, but then slapping this thing on that can actually take. So I think I don't know what it is today, but yeah, it was like 30M plus in in revenues over the course of must have just been a couple of months. So yeah, I think it definitely good to like you have to balance like being the first, being a genre builder, and then yeah, especially if you already have like a token on the market. So
Hmm.
And how does like the we've recently in the last year we've seen Kobe's project Echo come out into the fray, and has that, in your experience, has that been something that's been useful for some of these guys writing checks out there, or you're not really interested in it? Is that something that is like a almost sort of a curveball or a spanner in the works for people who are writing checks in your position?
Yeah, I think like Echo and Legion are good at getting angels to like fill out the rest of the round. So say you have like 400k left of allocation, rather than like kind of create a list of individuals, you can just put that all on Echo and then you like fill it up pretty quickly. Um, what is concerning though is like if the entire round is just Echo,
right.
and like kind of you've seen this in Web two is like companies that are purely crowdfunded like end up being adversely selected because either means that all the VCs passed or like there's no accountability on the company because everyone's check size is too small. So like you don't have someone who's uh, either like formally on the board or even if informally kind of like asking the team for investor updates, making sure they stick to their timeline. Um, that's why like purely crowdfunded projects tend to be adversely selected. So I think like the right mix is like having a good lead investor and then filling out the rest of the angel allocation with Echo.
Right. So I take it you're not like a big believer in like the internet capital markets thing, like the Believe app.
Oh, I think Internet Capital Markets is like a good rebrand of meme coins.
Yeah.
Same as
It's clever. It's
what
clever.
Jesse tried to do with content coins on base. It's like
Hmm.
the highbrow version of like lowbrow meme coins.
Yeah.
That's a nice way to put it. I think it's fascinating that, I mean, outside of like internet capital markets, like a discussion point that we've been hitting on like multiple times over the last couple shows is sort of like the industry or market infrastructure when it comes to funding. It's like these different roles in the ecosystem where, we have VCs, but we also have like bootstrap protocols who, introduce like a different way of like funding a startup. And then to your point, whereas like actually something like Echo or Legion can be complementary to VC funding, right?
Hmm.
Um, but at the same time, it's very insightful that you say that there need to be also like these larger players who can hold startup teams like really accountable, um, and have some weight in the whole equation.
Yeah, yeah.
That's yeah, that's a great insight. In general, great insights on like fee from you from on like VC and funding markets, like structures and dynamics. I think that was very interesting on this episode. So thank you for those insights. Really enjoyed it. Really enjoyed having you on. Um, Obviously, also thank you, Daniel and D, for joining me once again. Thank you to the audience as well, for tuning in. So yeah, another week. This was market cap. where we cover and explore current markets together with other sharp market participants. For daily updates on current events, you can join our Telegram channel as well. The link is in the bio. And you can join us next week, of course. We're live every Tuesday at 10 a.m. Eastern Time on X and YouTube. For reminders, you can turn on notifications for Alea Research. With that, I'm closing it out. Thanks, guys. Richard, thanks
Yep.
for
Thanks for tuning in, guys.
for
Cool.
joining
And
us.
Thanks
thank
for
you,
having me
Richard.
on.
Yeah, thanks for your time.